Good morning, investors, entrepreneurs, and market movers. Today, I have a market update for you. Everything you need to know for this coming week and everything you need to know to make investment decisions. First off, looking at the futures, we have the Dow pointing down 0.36%, S&P down 0.34%, oil up 1.55% to $83.55. 10-year is pointing just slightly higher at 1.576. Bitcoin actually is down a little bit from its weekend rally, sitting at 60,876. It rallied over 62,000 over the weekend. Nice run up in Bitcoin there. As far as the headlines, China's Q3 September data is showing a softer economy and a little bit disappointing GDP growth, mainly due to power outages and real estate defaults. Moving into events for the week, to start off, Bitcoin ETF is expected to start trading on Tuesday, so that'll be a big event there. We got like 5 or 6 reports we're looking at. Monday, the industrial production is expected to raise 0.2% from the August reading. This is to track output at factories, mines, and utilities. An increase in this number would mean a stronger economic growth, pointed to a stronger economic growth. Tuesday in the morning, September housing starts is expected to have a small increase. Same thing here, a higher number points to a stronger housing market and mortgage demand strength. Wednesday, the Federal Reserve's Beige Book is released. This is an interesting one. Summarizes economic activity through the eyes of the business contacts. The Fed relies heavily on this data during their FOMC meetings to make policy decisions. So this is going to be a big one. We can see what the Fed's going to be looking at for their data. Might not make a difference, but if there's big changes, the market will definitely react. Going into Thursday, the first event we have is the weekly unemployment update. Pretty basic weekly update there. We'll see what the unemployment's doing. Second report on Tuesday is the September existing home sales is expected to increase. Just like with the new builds, this shows housing sector strength and mortgage credit demand. An increase in this would point to a obviously stronger housing market. Lastly, on Thursday, we have the September leading economic indicators. It's expecting to raise 0.5% from last month's reading. This indication attempts to predict future economic activity for the next 3 to 6 months. Lastly, this is obviously a busy earnings week, so be on the lookout for what earnings are going to be doing. Strong earnings, just to recap, would be good for stocks, bad for bonds, and point to consistent inflation pressure. I expect a lot of supply chain constraints, issues, talk. That's going to be a buzzword for sure, so keep an eye out for that. Other than that, that wraps it up for today's update, and have a good week and go make some bread.